So let's talk about limited company and reporting key dates. The key thing about this is that you've got two organizations that you've got to appease, and the first one is Companies House. And we're talking about, as a director, you are legally responsible for the limited company, and therefore you've got to follow the rules and the Articles of Association. Now, the Articles of Association typically will say, here's the rules and responsibility of directors. So I'm going to share with you what a model Articles Association is. A model is a template, by the way, but HMRC, Companies House, tend to use these fancy words called Model Article Association. We will just refer them as templates. You, as a director, must keep records on report changes. So reporting changes could be the directors that have been changed in a company, and you must file your accounts to Companies House and to HMRC as well. And you've got to pay tax, obviously. So there's a lot of things that's going on. Oh, the second to last point is tell other shareholders if you might personally benefit a transaction the company makes. So if there's a conflict of interest, typically. Now, to be honest, we're talking about husband and wife setting up a limited company, so there shouldn't really be that much of a conflict going on there. So that's mainly aimed at more larger companies. Articles Association, this is a standard that we use from Companies House. It is very useful. What the Articles Association is all about, and it's something that you should be adhering to. If you haven't read it, it is a fascinating read. It's a lot of legalese, gobbledygook really, but it is a good document to read just to make sure that you understand what your roles and responsibilities are. How many people have really read them? Very few. And yet you're legally bound to uphold what's in that document. Ultimately, once you sign the document, the company up, you have signed to those rules, regulations. So there's a limited liability statement. So it's basically saying, in this limited company, we have a limited liability. Any liabilities that the company can't pay will not fall to the directors and will not fall to the shareholders. And that's what a limited company really is all about. It talks about the director's powers and responsibilities. So it will say that the director is the person responsible for driving the business forward, the commercial decisions that can be made, and the legal person responsible for the filing of information to Companies House and to HMRC. It also talks about director insurance and indemnity, and it's also worth making sure that the director has indemnity insurance. So in case that there's something going on, you have an insurance or you have an indemnity to limit that liability. It also talks about decision makers. So yes, the director is the person running the business, but shareholders clearly have a voting right. They have the power to remove or bring in new directors as they choose. Typically, we're talking about the same person here when it comes to your own limited company. We're talking about family-sized businesses. So unless you're going to fire yourself, this really isn't that relevant. This is, again, relevant for larger companies. It also talks about share types and allocations. So again, remember, if you use an off-the-shelf company, it will be ordinary shares and it won't have the specific share types that we talked about. At that point, this is where you can use someone like a solicitor. Tarek is online now. So Tarek Mubarak is a solicitor we refer people to, and he can help you with setting up a company, making sure the share types is correct, and then talk about the dividend policy and how things are going to be paid. You should also have meetings and decisions like general meetings and votings, and who is going to be paid dividends at the year end, and is a dividend going to be paid? And there's a few other things that you may have decisions based on as well. How many people do these documents? Very few. Is it legal requirement? Yes, it is. And part of our new process now for limited companies is we're creating these documents for you so that you have got these for file. And let's just make sure that you comply, because we know directors do not do any of this. So we just thought we should do this for you instead. And as the tip says, work with a solicitor like Tarek Mubarak to understand these in detail. You also have to submit confirmation statements. That says conformation. I just can't believe I just did that, but it's confirmation statements. The details of your registered office, directors, secretaries, and the address where you keep your records It's just basically you telling Companies House who is running the business, who the shareholders are, and some other kind of stuff that's going on with that. You also have to tell them your SIC code. Now, this is really important. Again, a conversation that we was having regards to loans from banks. We had a client that couldn't get a mortgage through the limited company because they had the wrong SIC code. And we had to change the SIC code, which took a few days and to get confirmation, and it just delayed the mortgage process. So it isn't the worst case to happen if you've got the wrong SIC code, but it's better to understand this at your confirmation statement and your return to make sure that you SIC code. And what we do for you is we'll always tell you what these details are on an email, and we'll ask you to confirm that they're correct. And if they're not, we can change them for you on Companies House. We're going to slicken up that process next year, well, this year, in fact. So it makes it a bit easier, so you can always go into the system and update the information that we hold for you. And that way, it just makes sure that Companies House is always up to date. Let's just move on to this. So confirmation statement, again, with the same typo. Due date is 1 year after the date is incorporated, or if you've done a confirmation statement halfway through the year, then the next confirmation statement will be due 1 year after the last one has been submitted. You'll notice that it says here £13 to file for your confirmation statement, spelt correctly there, online, and £40 by post. We will do that for you as your accountants, tax advisors. So you don't need to worry about that. But if you had your limited company on your own, you would have to pay these fees. So let's talk about accounting records. Boring, but necessary. So this is where we're talking about now that you must store information about your company for 6 years, and it's typically your financial transactions or money received and spent by the company. So we're talking about invoices sent out to your tenants, to your suppliers, to your customers, and invoices that you have paid must also be kept. And each of those invoices must be your company name. Even I came a cropper some time ago whereby an invoice was to me personally. I was investigated, and HMRC said, unless you get this invoice in your company name, we will say it's a personal transaction and will deny the tax relief on it. Fortuitously, I was able to get the invoice redone in the company name, and there was not a problem. But you do need to be careful of that. It will also show the assets owned by the company. So we're talking here about the properties that you buy, fixtures and fittings that's going on, any equipment that you use. It'll also talk about debts the company owes or is owed. So tenants will often owe you money, but you may have customers if you're a trade business as well, and those need to be shown on your balance sheet, as well as the liabilities that you have. So we're talking here about your mortgages, we talk about loans to joint venture partners, we're talking about creditors for anyone that you owe money to. So this is kind of all the details that you must keep for 6 years against your records. And again, we will often help you with this financial information, and we always ask our clients to use an online bookkeeping system to help you, keep a record of your financial transactions rather than use spreadsheets. So anyone you're moving towards, we often say no more spreadsheets. Let's get rid of those and let's move on to an online bookkeeping system. You'll notice the penalties, fines there. If you do not keep accounting records and HMRC are not happy, they can disqualify you as the director and fine you at the same time, which is not pretty at all. So then, guys, what we talk about here is an example of accounts that need to be submitted to both Companies House and to HMRC. So if we started a company in 1st of January 2018, it will have a year end because it's a 12 months after the start point of the 31st of December 2018. You will need to submit accounts to Companies House. The first set of accounts needs to be registered, submitted to Companies House 21 months after the registration date. So that date is the 30th of October 2019. That's your first set of accounts. Subsequent accounts needs to be submitted 9 months and 1 day after the year end, which in this example is the 1st of October 2020. So those are kind of the key deadlines for Companies House in which you must submit accounts to. There are also HMRC deadlines that we need to comply with, and the tax needs to be always submitted, to be paid to HMRC 9 months and 1 day after the year-end date. So here we're talking about the 1st of October 2019, and the submission of the CT 600 tax return needs to be submitted 1 year after the year end, which is the 31st December 2019. What we will always be saying to you is we will submit the tax return, the CT 600, at the same time as the annual accounts, just so we know that everything's done to both Companies House and HMRC tax return without you worrying about it in the future. Don't forget, we will be asking you 2 months before your year end to book time in with us. We want to talk to you because we wish to identify any tax mitigation activities we can carry out, whether that's pension contributions, repair or replacing items in one of your properties or your buildings, or buying equipment right now that would be useful, just so that you can get a reduction in tax. We can only do that if you are proactive and book time with us 2 months before the year end date. Don't forget, we will also be chasing you monthly to get your data from you to talk about the data to be submitted to HMRC and what information we require. That is things like your annual accounts, so whether that's Xero or QuickBooks. We'll be asking for your bank statements, your mortgage statements, your completion statements on purchases that you've made or sales that you've made, just to make sure that if you ever are investigated by either Companies House or HMRC, you've got a robust set of accounts that you'll have confidence in.